Welcome to the Accountants Exposed podcast, where we create light bulb moments for our listeners by exposing the journeys, secrets, and insights of some of the top players in accounting. This podcast is brought to you by Michael Edelstein, Director and Founder of Recruitment Expert, a specialist accounting recruitment agency working across Australia, New Zealand, and Asia Pacific.
Hi, Brett. Welcome back for part 2 of the podcast to share more of your insights. Now, a lot has changed since we first caught up nearly 18 months ago, I believe.
Yeah, that's right.
Now, look, you've been through a lot of booms and busts in your life, most recently GFC, now COVID. Walk us through some of your decisions and actions as part of your COVID response and sort of your thinking behind them over the last couple of years.
Yeah, Michael, we started the firm in 2006, and I guess I started work as an undergraduate at Pricewaterhouse in 1993. So 1993 was the back of the sort of 90s recession. Then we had the tech blow up in 2000. I had a feeling in 06 that something was up, and we played, we more than doubled, I think tripled the firm through the GFC. And then when the pandemic turned up, I guess we'd always run the business, with this saying in mind. My very first client, I told him about our 50% upfront, 50% on completion policy that we started the firm with, so that we didn't have any exposure to debtors because we couldn't afford to, otherwise we'd go broke. And I remember him saying to me, well, what's my fee for the year? 25,000. Okay, Brett. And he gave me a check for the full amount. He goes, that'll help your cash flow. Now, I remember that guy, he's still a client, great guy. He said, Brett, you'll do well because only the paranoid survive. And so we've run the business always with the view that we shouldn't waste money. We shouldn't spend money on things we don't need, because one day we might need that money for a deal that we really want to do, or to survive a particularly nasty, situation in the world. So, I had listed the business in 2017 on the ASX. And I remember saying to investors, I said, I genuinely believe this is a recession-proof business. It's very, very well structured. I took the pandemic as an opportunity to prove the strength and fitness of the business and our people. And, with this mantra that we could prove that the business was pandemic proof. So, when the situation turned up, obviously I stayed up every night watching Bloomberg later than I should have, just to try and understand what was happening. Our first concern always has been our people and their well-being, their health. So because we're set up on one network that's cloud-based, we could work from anywhere. Every single person, so everyone was sent home. They all were able to be set up and work as effectively from home, as they could from anywhere else. And so our long-term heavy investment in excellent technology and a great team very much, was evident throughout that period. Once, your people are looked after and healthy, we ran personal training during lunchtime by video. We sent care packages that included all of the healthcare needs that anyone would have. We sent food packages, discounts to, money for Woolies, money for JB Hi-Fi, all sorts of good stuff. We had a former Olympian, Bradbury, speak. So we had guest speakers every Wednesday. We called it Wisdom Wednesdays. We did tours of Venice and Rome and Moscow and all sorts of places by video with a live person through a friend of ours, a travel company client on the ground, taking us through these places. Wow. And so the idea was to sort of try and get our people to understand that, it was important to be very, very, very committed to the clients, and also that you couldn't remain committed to the clients because we didn't know how long it would go on unless you were very committed to your health and the well-being of you and your family. So we were trying to make sure that people kept to a structure. We were asking them to maintain their work structure, make sure they were exercising, give them some other input around, you know, Wisdom Wednesday and Friday night drinks and other things that we were doing by Zoom. The benefit of all of this was that, you know, firstly, it's one thing to say you care about your people. I think our people know that. To me, you know, I always say we're in show business, not tell business. So it's better to show people than tell them. And I think our people, I have no doubt our people saw the level of care that was demonstrated by action rather than words during that period. And that care was then extended by our people to our clients. And so we put a COVID response squad together that did all of the technical information in real time out to the clients. There was more than 60 bits of Coro in no time. I remember, you know, meeting a firm that was thinking about joining us, and I simply gave them a copy of all the Coro that we put to the clients that we collated with all the dates. And I said, I guess your clients probably got the same service. And it's one of the reasons that firm decided to join us. They said, we couldn't have done that. We had a dozen partners working, you know, seamlessly together to produce that material with our marketing team. And the result of that was happy clients, you know, more than 500 Google reviews during that time. We've got an NPS score over 65. So we measured our NPS score during that time, which is over 65. The global score was minus 18. We had a bit more time because no one was traveling. So our people team popped us into Great Place to Work, that we were given that designation. We got an Employer of Choice award and all sorts of stuff. But the rewarding part of all of that, look, challenge is overwhelmingly positive. You know, I would never wish a pandemic on anyone, but you know, much of what happens to you in life you don't control, but you definitely control your response. And our teams have heard from me and others, you know, our leadership forever, that, you know, two big ideas. One, you get to choose your own attitude, and your attitude's contagious, so be very conscious about that. And two, you know, don't ask for things to be easier, ask that you get better. It's a classic Jim Rohn, American motivational speaker comment from many years ago. So, you know, under challenge, you find out the people that I consider a match fit, and we want that to be our team, and we want to put the benefit of that to each other and to the clients. And so we've grown the firm very strongly again, over 30% during that year. We've delivered to the clients, we've delivered to our people. And so it's been overwhelmingly a positive experience. Probably the biggest thing to come out of it was that it showed that we could do a lot more together, in that, you know, we're having at least weekly full directors meetings on Zoom. We're having at least fortnightly full team meetings on Zoom, you know, over 300 people that we've had to rig it up commercially to be able to do. So the communications got better. The acceptance at all levels of the firm for outcome-driven behavior, as opposed to, you know, behavior that fits somebody else's criteria of how they like life to be, has changed. That's been a big win for all of our people.
What do you mean by that?
Well, you know, I think the greatest challenge facing the economy in terms of discrimination is ageism. You know, sexism is an issue. Homophobism is an issue, potentially. I don't think to any great degree today, but ageism certainly still is. And many people in the profession just like things to be the way they were yesterday. We've always been trying to create a new tomorrow. And, you know, we've got older people and younger people who, you know, are forward thinking in their mentality. So saying to people, we need to look after our clients like this, we must look after our teams like this, tell us how you think we should do that, and letting them get out on the edges and do that has meant that the uptake of technology has been stratospheric. Frankly, we've been able to train people. You know, we've probably delivered a couple of decades worth of, you know, technical training on software and other tools in 5 minutes. And every person, no matter their age or experience, has got on board with finding better ways to do things for each other and for the clients. I think it's built more tolerance of people's lives, to understand that, you know, some people have dogs, some people have children, Some people have elderly parents living with them. Some people have children with health conditions. Some people have family members with serious health conditions. So I believe that it's shown the broader spectrum of the context of the humanity of the people that are in the firm. And I believe that leads to more tolerance, and not just people tolerating things, but more acceptance that, we're not employing things, we're employing people, and that we achieve our outcomes with people. And so unless you're terrific at, leading and managing people, then, you can't win. That has not been a grind for our culture. It's not been at odds with our culture, because it has always been the way that we've thought. But this has been a tremendous time to put that into action and to take it even further, because, necessity is sort of the mother of all invention.
Did you unify, I guess, all the offices together for all the meetings, or was it kind of each office ran their own meetings and wisdom Wednesdays, etc.?
No. So the benefit of our structure, Michael, is that each office, has its leadership, controls its P&L and its balance sheet, but has, the full force of 65 partners and 350 people. So they didn't have to organise the COVID response. All of the health initiatives were run centrally. All of the correspondence to clients was done with a partner group that volunteered to be involved. I said, let's get a dozen partners, get them together, any juniors that want to be involved, put them together, write the response, get marketing to produce it in real time. If the announcement comes out, we need to have our response out within an hour. And so that was, you had the sort of central team coordinating the efforts right across the offices, and taking the knowledge and insights that are coming through from one office and putting it to another. Really good example is we run a WhatsApp group for all of the directors, and when they're on the phone to OSR or state government or helplines, they're sharing in real time, hey guys, I'm on the phone to whoever, they're telling me this, have you heard that, has anyone got any questions? Now, as what everyone might know, that whenever you ring these places, it takes half an hour to get on the phone. So what we're doing is we're loading up that director to ask a dozen questions while they're on there for a dozen different situations right across the network, and they're putting them through WhatsApp in real time, right? They're saying this, here's the link. They're saying that, here's the link. So we don't have 12 people on the phone sitting in the same queue. So I was incredibly proud of how the team leveraged the team. It's one thing to say you're a team, it's another thing to play as a team. In terms of our core values, we have three, and the third one is play as a team, because we know a team's more powerful than an individual. And, I just saw exercise after exercise where we could put Wisdom Wednesday together because of the group resource. We could tap people from all over our network to say, hey, can we get this guest speaker to speak? Can we get that person to speak? Can we do this experience? And so a lot of our young ones were like, I'm not able to travel because of COVID. So I said, great. Well, what we'll do is every 2 or 3 weeks, we'll just take you on a travel tour. And we took them through some of the best cities in the world with a private guided tour, who's walking through that city with their pointer, telling the story. And I think their experiences are, certainly I'll never forget. I know a lot of our team are like, I've never been to Venice. That was unbelievable. I cannot wait to go. Or I've been to Venice.
Clever idea. I like it.
Yeah, but when I went to Venice, I was just a poor backpacker, so I could never afford a private tour guide who knew the 1,000-year history and could explain it. Yeah. So, in terms of team building, guys are great at thinking outside the box. I love our people. I loved what they came up with. And for me, it's a great joy in life to just help make things happen, And
everyone back in the office now, Brett?
Yeah, so in terms of office, I've said to everyone that it would be nice to have everyone in on Mondays as a minimum. I think that helps people structure their week and get started. We've sort of gone for Monday, Tuesday, Friday. But again, I've said, Michael, by office, by director, by team member, people are individuals, treat them as individuals. When I say that last year we built 50 million in revenue. This year we'll bill about 65 million of revenue. Say we've got 300 odd people. A lot of people get excited in business about size. I always joke, right? My revenues are huge. Yeah. I say I get excited about each individual person that we're helping to become the best they can be. And so I've said to our directors, you cut an individual situation for every single person. We have our partners meet with every team member once a month. It's a mandatory part of being a partner at Kelly Partners. You must do a one-on-one meeting on the first day of every month with every one of your team, or I'll take that team member off you and put them under a leader that actually wants to demonstrate that they care about you and wants to meet with you every month. Pay attention to that team member's goals, their ambitions, and what they want out of life. So that's what we're doing. Most of our people, you know, it's really interesting. Most of our people have expressed a strong desire to be able to use the offices as and when they please. We're okay with that. I think we've proved through our quality of care for our clients and each other during this period that, you know, our teams can work from anywhere. And so that's sort of how we're managing it.
Okay. Are you sticking to flexibility then, or are you sticking to a must be in the Monday at least and then flexible?
Yeah, so Michael, I've always had this mantra that I'm not flexible at all about how we service our clients, how seriously we take the work, that we don't take ourselves seriously, and that we must look after each other. So I have no interest in being flexible around those values and outcomes. However, how you do that, I'm completely flexible about, right? So we know we have some juniors that have to be in the office because they have to be trained and they can't be trained at home. So for those, we say, well, you know what, in order for you to develop, this is what we think has to happen. But for most of our people, why would you tell an adult, you know, how to get those outcomes? So we try to lead from a position of values. All right, you must do these three things. You must demonstrate that you put others before yourself and that you care first for others before yourself. You must do what you say and you must play as part of a team. But as for everything else, you know, we're going to let you show us how you can live out those values to great effect because you're an adult. Now, if it turns out that you're not an adult, well, we would have recruited badly. We are not bad at recruitment, so I can't think of the last time that I you know, found out I had an adult that was behaving like a child. And then if you trust people who are adults, they over-deliver. You know, this is, to me, I think, well known. So look, I'm as inflexible as I've ever been. I'm just completely inflexible about the things that matter, and I'm completely flexible about everything else.
Is there anything that you were surprised by, anything that you wish you did differently, I guess, based on addressing some of the challenges of the last 2 years?
No, like I always think you can do more. So I wanted to provide all of our team members with a ripping pair of headphones. One of our suppliers sent me a pair, and then I rang him and said, great, can I get a pair for, these are amazing headphones that I've got here, Michael. But when I said to my mate, can you get me a pair of those for everyone, he turned around and said, oh, sorry, mate, supply chain, you know, can't get you 300 pairs. So look, if I could have clicked my fingers and dropped a, you know, Kelly Partners blue pair of those on everyone's desk, I'd have been really pumped, but he just literally couldn't get them. Other than that, you know, I think our team, you know, over-delivered. I think they were extraordinary during that period.
What's your prediction for the next 12 months, and what can accountants do to kind of take advantage of, you know, the situation?
Well, this is the most exciting time of my career. I've never seen the profession in a better place for, you know, for innovation and go forward. What I'm seeing is many firms that didn't have, you know, the right people, the right processes, the right technology, the right clients and the right financial model have really struggled. And in particular around, you know, retaining their best people and attracting great people. Yep. And so it's been a big sorting out period, which I have absolutely loved, because for too long, you know, talented people have had to sit in firms that frankly, weren't worthy of their talent. So we're having a lot of fun picking up great people. We've got numerous firms. You know, we've had 8 firms join us in the last 9 months, and there's more to come, where firms have said, hang on, we can see the Kelly Partners model makes sense. You're going to centralize up basically everything other than looking after the team and servicing the clients. So all the dross that partners have to do, like finance and marketing and IT and putting out ads for talent and replacing photocopies and doing fit outs. We've refitted almost all of our offices during this period, which is terrific to make, you know, really forward-looking, dynamic places for people to work from when they want to, on the theory that if you want to ask people to come to your office, you better have a great office that people really want to come to. So we've spent between $7 and $10 million on our offices during the last 12 months, refitted 10 or 11 of them, built a couple of new ones. So I'm pumped up about where we find ourselves, in that I've had many firms coming to me saying, look, you know, I'm literally just putting in front of them, this is what we did during the pandemic, and what did you do? And if you were your people or your clients, would you rather work with me and our team, or you and your situation? And that's not you know, for an intelligent person, that's not a difficult decision. So look, the reality is, Michael, if you put, you know, over 100 pieces of correspondence in front of somebody and say, because I'm not a sales guy, right? I'm a doer. So I'm a, you know, objective, fact-based person. I sit in front of anyone in our industry and say, as a small business client, this is the communication and this is the service you got from us. Now show me what you did for your clients. Don't tell me, don't bullshit me, because we know the industry floats on bullshit. Remember, I spent a decade as a young guy having to put up with the bullshit, right? So it's no sales pitch. I just print it out now. I've got a big fat pile of what I call evidence. And I say, right, if you were your client, this is what you got from you. What? Nothing. This is what you got from us. And if you were one of your team members, this is what we did for our team members. This is how much it cost me. This is the investment I made. This is the investment I'd made in our IT environment. This is how it worked out for my people. Now, if you were one of your people, would you rather have been working with me or working for you? And anyone, you know, anyone with any sense of A, humility, or B, intelligence, just looks at that and says, okay, hands up, you know, I get it. My clients would have been better off if they were your clients. My people would have been better off if they were your people. Now, remember, Michael, our industry has not been known for the humility of its leadership. And certainly many of the leaders in the industry don't have any aspiration to wisdom. They might have aspiration to smarts or aspiration to make some money. But in terms of, you know, growing in deep understanding of anything substantial, that's not something that, you know, tends to hit the top 10 hit list of most people leading most firms. And as a result, in the behavior that you see, you can see that, right? So, you know, for me, I don't care if a firm doesn't join us or a person doesn't join us. We have this mantra of making people, our clients and the community, better off. And so at the end of the day, if you want to stay in your ancient model, making yourself and the people that work with you and your clients miserable and worse off, keep it up. I don't mind. You know, we have grown the firm. We've grown our firm for 16 years at a cumulative average growth rate of 30% a year. Our staff turnover is about 8%. Our NPS is 65. Our Ebitda margin after partners earn is 35%. Our lockup days are 54 days. We're a public company, so it's all true and verified, and you can go and read about it. Now, most people won't read about it because it'll make them uncomfortable, and they'll have to, you know, give themselves some excuses as if to make out that it's fiction.
How do those numbers compare to the rest of the industry?
Well, IBIS tells us that the EBITDA margin for accounting firms in Australia is 19%. Ours is 35%. That in the US it's 18%. Remember that 19 and 18 are not audited numbers, are not public company audited numbers. And so we find that when we go into, I've seen 1,000 firms accounts now, Michael, over the last 15 years, we know that that 18, 19% is overstated. We know that the average lockup in the industry is said to be 120 days, but when we see firms, they've often got a list of debtors that, they're not counting in that number. We know staff turnover. I think PwC recently revealed at a Senate committee that their audit turnover is 30%. We think it's over 25% for many firms. We know that the NPS globally measured by Gallup for accounting firms is -18. We know most firms don't measure their employee NPS because they wouldn't like what they see. So look, we want the data that shows us how we can improve. We don't care to quote it to make other people feel uncomfortable or to tell them we're better than them. We're really just serious about doing the best we can for our people, making sure that we can measure it, doing the best we can for our clients, making sure we can measure it, and doing the best for the communities that we operate in and making sure we can measure it.
Right, quick question. You mentioned 35% Ebitda before partner distributions, right? How do you... After partner. Okay. Given the amount of investment that you talked about, like both technology, fit outs, etc., how do you maintain it at that level?
So we don't waste any money, Michael. We say great advice, no marble. So while we fit out and we do things, it's all about, do you buy, we have, say, 60 photocopiers. We buy them, on average, we go into a firm, they're paying 3 or 4 times more than we're paying for our photocopier and paper. And that extends to pens, to insurance, to software costs, to everything. We're group buying. We are fanatical about managing our costs by just looking. I think it's Drucker who says, what's not measured is not managed. So we have 18 overhead lines. It's a standard P&L across every firm. We analyze them every single day. We group buy and we pay attention to our cost of doing business so that we can invest in our people. Now, when we do our fit outs, just happens you've got instant asset write-off, which is pretty helpful at the moment. And we've got clients that are in the fit out business. And if we do them all at once and say, here's our program, we're going to refit every 7 years, every office, then by coordinating those fit outs, we're buying hundreds of chairs at once, hundreds of desks. We use the same chairs, the same desks, the same paint, the same color paint, the same everything in every office. So that when you walk into an office, any Kelly Partners office, it has the same technical set, the same feel. But when you go into a meeting room, you press the same button, so all the tech works. So any of our partners can meet in any of our 19 offices and use the tech in the same way they use them in any other office. And they're allowed to have clients anywhere. And so basically they become these, situations where you can do everything cheaper by managing the business as well centrally. The partners have better information to make better decisions. Hey guys, we've segmented your client base. These clients are costing you money. I did one for a new firm the other day and I said, look, your bottom 20% of audit clients, you've got an average 125% write-off. Oh shit, we didn't know that. Great. Because there's no one in the firm with the time and the expertise to show them. So we say, hey, here it is. What should we do about it? Let's keep the ones that are strategic and are important to the community, but everyone else, let's redeploy them to our competitors and let them cop that write-off. Or you can, triple their fee and see if they want to stay. So it's just rigor. It's just effort. Michael, there's a great Forbes article that says that CEOs who play golf more than 25 times a year have 50% worse share price performance than those that don't. I meet a lot of people where they do accounting so they can play golf. I absolutely love helping our people. I love helping our clients. I love what we're doing in the community. So this is my hobby. I'm not here looking to get out the door to do something else. So there's a huge amount of depth. There's a massive amount of rigor, and our guys love it because, they're not sitting around thinking, oh shit, I have to do everything myself. And
does it also mean you're pushing your staff a lot more as well in terms of productivity compared to other firms?
Yeah, look, I've had that comment over time, but I remember I got a team join us and I said to them, look, if I showed you how to work better, would that be helpful? And you know this because of being in the people industry. Most people have never been taught how to work at all. They might have been taught how to do a tax return, but they haven't been taught how to work. If you walk So what I mean by that is a great book, Mortimer Adler. You know, if anyone who wants a great book, anyone who knows me knows I love books. So Mortimer Adler, American philosopher, he wrote a book called How to Read a Book.
Yep.
And I love that because, you know, I think the stats are that average Australians read one book. On average, Australians read one book a year and only read 18 pages of that book. And why would that be? Well, most people have never been taught how to read a book. So I say to everyone who says, I want to read, I want to read more, I want to read better, because, learning leads to earning. I say to them, look, read this book on how to read a book. And they're like, well, why would I read a book on how to read a book?
Yeah, it's a very famous book.
You just told me that you don't know how, you're not getting the reading outcomes you'd like. Have you ever been taught how to read a book?
Yeah.
And they're like, actually, no. And I'm like, well, that's funny, because you go to school, they want you to read these books, but they don't teach you how to read them. Yep. Well, work is the same, Michael. So we get young people into the business. And what's the biggest challenge facing a young person? They don't know how to prioritize. Now they've got a partner and a manager throwing 10 jobs at them. They can't manage 10 things at once. So what do? We sit them down and we teach them how to get themselves organized. You got 10 jobs, mate. When are you going to do them? Oh, yeah, we're going to do them on this day. Great. Let's put them in your diary. You see, if you don't manage the inputs, you're not going to get great outputs. So let's put in the diary when you're going to do the jobs for the whole month. Yep. Now, that's how you organise an audit team. That's how you should organise anyone else. And then the manager's job is to actually manage. If a job changes priority, they should help their juniors organise their diary so their juniors aren't having a nervous breakdown. Now, people that, fail to plan to fail. And most people don't plan. So how well are you planning your workday? Today, that's my calendar. It's color-coded. You can see what I'm doing the entire day, and the entire firm can see my calendar. I can see the entire firm's calendar. A manager can see everyone else's calendar. I've always said to our teams, if your calendar's empty, I'll book your day and I'll send you to some far-flung office. So plan ahead. A successful day starts the night before. Plan your day, plan your week, plan your month, plan your quarters, plan your holidays a year in advance. You can never over-plan. Now, when a young person walks in...
Basically, just...
What's that?
Is that the secret, basically? Getting everyone on a calendar, live by the calendar?
Interestingly, there's study after study after study that shows Australia's economic productivity over the last 20 years has basically gone sideways. Now, we know that the amount of management training that goes into most organisations is virtually zero. So we have a whole industry of people called managers who've never had any management training. And if you walk into most firms and say, hey, apparently you're a manager, what specifically are you paid to manage? Please write me a list. They can't write that list because they've never been trained. So what do? We just help people get themselves, their lives organised better. Michael, here's your calendar for the year. When are you going on holidays? Where are you going? Please put that in your calendar and go and book them. That gives people a reason to work. And then say, what are you doing today, tomorrow, this week, this month, etc.? Let's plan ahead. Then I say to our managers, your job is to make your most junior person the most successful person in your team, followed by the next most junior, the next most junior. Bottom up management, not top down pigeoning. So pigeoning is the person on top shits on the next person, shits on the next person, shits on the next person. So if you're, I say, if somebody in your team is a failure, as a manager and a leader, I'm looking at you. If you hired them, they are your lifetime responsibility, because we hire for life. We don't hire for convenience. Yes, somebody can leave, but I'm not hiring people to fire them in 3 months' time because they haven't performed. If you hire them, Michael, and they fail, I'm looking at you. So we have a 17-step recruitment process. Do your recruitment properly. Make a proper commitment to that person, their life and their career. Take seriously the obligation to protect them, their resume, their future, because it's devastating for somebody to come into a job and leave 12 weeks later. Devastates them personally, devastates their career prospects in terms of the impact on their resume. And then we as an organisation must make a personal commitment to making that person successful. And if you come to me as a leader and you tell me someone's not successful, well, mate, you hired them. It's a little bit like when a client comes to me, Michael, and they say, you know, my husband or wife, they're a nightmare. They're giving me grief and drama, drama, drama. And then I say, but hang on, you hired them. So if you think your wife or your husband's an idiot, you're the idiot that hired them. So let's look at you first, because potentially if they are the idiot you're making out, you probably turn them into that idiot. So we have this mantra at Kelly Partners that Steve Jobs and Nelson Mandela were once employees of organizations. Mandela was a lawyer, Jobs worked for Atari. And because they couldn't effectively lead and manage those people, they left. Now, could you imagine if Steve Jobs is an undergrad in your firm and you get him to stay, what contribution he could have made to an organization like Atari? But he was maligned and ostracized because he didn't wear shoes and he smelled a bit, and, you know, it was a bit weird. So he got thrown out because they probably had a no arsehole rule, when potentially you need a few more arseholes in your organization that don't wear shoes and smell and don't think the same way as everyone else. So, like, I'm passionate about the idea that most people didn't grow up next to somebody that became an Olympian or became a billionaire or became a world leader. They've never seen somebody reach their full human potential. So they don't know what it is. They just grew up next to someone average, and they basically majored in averageness their whole life. So the question is, how are we going to help our people to be the absolute best version of themselves, to maximize their own potential? Oh, but if we do that, Brett, they might leave. Yes. If they become Nelson Mandela, that would be terrible to say, you know, Nelson Mandela used to work at Kelly Partners. You know, Michael, I was in Israel on a study tour thing, and I met Dave Sharma, who was Australia's ambassador to Israel. He just stepped down, and I was having this dinner. I had the new ambassador to my right and a very great friend of mine to my left, and they mentioned this was the new one. And I said, well, who's the old one? And they said, oh, Dave, you must meet him. And I met Dave and I said, mate, what are you going to do with your career? And he said, oh, look, I'm talking to some big companies, but not quite sure what to do with me. I want to go into federal parliament. I said, well, mate, what are they paying you to be an ambassador? The answer is not much. And I said, well, why don't I just send you an offer tomorrow? You can come and work with Kelly Partners. You can run a government business and do some consulting, and I'll support you in your ambition to become a federal parliamentarian. I'll pay your salary and make your partner and pay you some money and give you the time to go and pursue your dreams. Now, mate, if you fail in doing that, we win because you become an awesome member of our team. And if you succeed, I win because I have the personal satisfaction, and the firm does, of knowing that we've helped another person achieve their dreams. And so off he went, lost the first time, won the second time, and he sits in federal parliament. And, you know, to me, that is a great privilege and honor to be able to help somebody achieve their dreams. Are we as an organization worse off because, you know, he's living out that dream? I don't think so. So if we can get beyond ourselves and our sort of small, mean and scared mindset and be big and be generous and be brave, then we've just got a completely different take on how to play the game. That's not common in accounting firms. So, you know, we're having a lot of fun.
Quick question. You mentioned before, like, a lot of firms are struggling with getting staff, which is, you know, with closed borders, etc. Especially, I guess one of the issues now, because of the dynamics of demand and supply, there's been a lot of salary creep. How do you guys manage that situation?
Michael, I think that whole commentary is funny, right? Like, the recruiting firms were going bust during the 2 years of COVID because nobody was moving jobs, right? And so there's now this sort of commentary that, hey, everyone's leaving for a pay rise. It depends whether you're dating or you're married, right? If as an organization, your people are dating, they're just hanging around looking for the next best offer sitting on Tinder, then probably you've got a challenge. But if you've got people enrolled in a mission to genuinely make a difference and you're growing your business, you can keep paying people more every year. You know, people say to me, Brett, why are you committed to growing? And I say, well, I'm trying to grow the business for our great people so that I can grow their opportunity. And that's always been the ethos. I don't need one more client personally, and I haven't needed another client personally, you know, since been 3.
How much of your growth is organic though?
50% organic and 50% acquired. So our aim has always been to grow 5% organic, 5% through acquisition. Typically we've done 10 and 10 or more, 15 and 15. But I don't mind, Michael. You know, there is no firm in the world that is of any size that hasn't grown via acquisition. I remember I was at Price Waterhouse, and 6 months after I left, I knew something was afoot. I did a small merger with a group called Coopers and Lybrand, and they're now PwC. I have people say to me, "Oh, well, Brett, you know, it's not as good to grow via acquisition as it is to grow organically." My answer is, that's like arguing with a bird as to which one of its wings is better. If you don't do both, you can't become a major firm. You're an aeroplane with one wing. And the reason, Michael, is if somebody calls me today and says, "I've got $5 million worth of work for you," if we're billing $220 to $250 a person, I'm going to have to go and find 25 to 30 people. And if I call you and say, "Michael, I've got $5 million of work, it's coming in a week, and I need 25 people," what are you going to tell me? "Well, Brett, it's going to be very hard to find those 25 people on that amount of notice." So, you know, it's a false, to me, it's a little bit like arguing about whether somebody's going to pay you in cash, via check, via EFT, or with their credit card or their debit card.
Yeah.
You know, at the end of the day, if you look at the history of the Big Four or any second tier firm of any size, they've grown organically, which you must do. And, you know, our aim at 5%, we think long-term GDP growth 2%, so it's 2.5% GDP. Plus, we're happy to welcome people into our organisation that want to be part of what we're doing.
Yeah.
What are we going to pay? You know, "Sorry, mate, I love you, you share our values, and you want to make the difference that we want to make, but I can't help you because I don't believe in helping, you know, other people by letting them join our firm." You know, right from the beginning, I knew that there'd be a lot of baby boomers who are looking to retire at the same time. I believe I'm doing a tremendous service to those people in helping them professionally manage their succession, look after their people and their clients.
Well, you've done 54 acquisitions, right? In the last, well, since you started.
No, I think we've done about 54, what we call partnerships, Michael. Other people call them acquisitions. We run partnerships, where we've had people join our firms in, you know, in one format or another. They've either sold us 51%.
Evaluate them? Like, what's your process? What do you look for?
Yeah, so we've got a very, very rigorous process. We're a sort of rigorous process organisation. But at the end of the day, Michael, we are a values-driven organisation. So when I meet the principals of a firm, I'm just looking at them and listening to them on the basis of our 3 values. So do they talk about themselves and how great they are? Or do they talk about the impact they're trying to make, the difference they've made to their people, and how they've helped their clients and communities? So I'm listening to the words that come out of their mouth. There's a great old training manual for life, and it says, listen to the words that come out of a man's mouth, because then you'll know what's in his heart. And so I'm listening to what people say. They often write me an email, and, you know, if every paragraph starts with I, it's fair to conclude that that's an I-focused person. That's the first thing. Second thing is, I'm trying to work out whether they'll do what they say. So I'm like, okay, you're going to send us this information. No worries. Do they send us the information? Don't know. And the third thing is, I'm looking at the team. So, you know, great leaders gather people. And so if somebody sits there and says, my business would be much better if my shit people were great, I have immediately a reflex in my mind that says, but hang on, great people work with great people. You know, when somebody says to me, it's hard to recruit at the moment, Michael, just can't find any good people, I think to myself, well, I know a lot of bad people who've told me they can't find good people. And our industries, you know, probably follows the 80-20 principle like everything else, right? People who might mouth the words that they care about their people. But if it came, you know, if it meant that the partners had to invest some of their own cash to make their people better off, and maybe even pay themselves less this year, they wouldn't do it, right? So I'm really looking for the quality of the team that you have around you, from the bottom to the top in terms of seniority, tells me a lot about, your values. Now, if I've got a values match, then I'm just looking for somebody that looks after private clients, not public companies. That's where we focus.
Yeah.
And then I'm just, have this saying that, Warren Buffett has this great saying that, when you're wealthy, you should definitely not marry for money. And so I don't want somebody who's broke because of their own 30-year history of running their firm trying to join us for a check. And I don't want some egotistical person that comes in and tries to tell us we don't know anything. We don't believe we know everything, but we know a few things. So we have to have that person who's got that spirit of partnership and says, hey, Brett, I'm really good at these things. I can see you guys are good at those things. I think together we could really do really well.
So what's the reason most people, like most firms, join you? Is it a succession planning thing? Is it, like I know you obviously have Greenfield, you have Tickins. There's a variety of things going on, but overall,
it's sort of for every reason and none, right? We bought firms off guys that have died, from their families that I've known that have called me straight away and said, Johnny died yesterday and we've got this firm and I need you to help. Yeah. I'm motivated to help. So I run over with our team and we pick it up and we help. I bought a couple of firms 100% off a couple of gentlemen off their wives actually, who'd had nervous breakdowns, which speaks to the stress that many practitioners are under. And we've run over, picked it up, sorted it out for them. Again, I just see that as an opportunity to help and make a difference. I bought a couple of firms where they've gone into liquidation through bad behavior. Again, I think about the clients and the people. I'm not really concerned about reputational impact of their bad behavior because I didn't do it. So I go and help. I'm very driven by helping people, Michael. That's what I like doing, right? It sounds really weird, but I had this great mentor. I lost my job at 22. And I always talk about these great mentors I've had, many of whom I never got to meet. But because of the information world we live in, I can read everything about them, watch every YouTube. They become like my mentors. And so, I read a book that said, the more books you read, the more wisdom you'll have, and find dead mentors, right? Well, this guy, Zig Ziglar, he was still alive, but he's this great old American speaker with a Southern drawl. And he said, if you help enough people get what they want, you'll get what you want. And it just showed me that you have to be in the business of helping people. And if you're in that business, you help your partners, you help your people become partners, you help your people become the best they can be. They want to get into federal parliament, help them do that. They want to go do a law degree, help them do that. They want to go on a holiday, help your people, help your clients, help your communities, you'll do fine. And so for me, my personal mission is to say that can good values, good behavior compounded over a long period of time, give you the type of life you want. And what's that life? Well, at the end of the day, my great mentor, you can see Warren Buffett behind me here. He just stands there every day for me. Buffett is got all.
Is he a number one mentor?
He's my number two, probably number two, number three. I've got a few, but a wise man that once lived, had some good ideas. Buffett said that, the definition of success is at the end of the day to be loved by the people that you want to be loved by. And so, he's known all the people in the world with all the money, the status, the power, but he says a lot of them end up at the end of their life, they had a heart attack on stage in front of their 500 people that knew them, nobody'd help them. And I think you can see, Shane Warne died a week ago. I think you can see that Warnie, for all his faults, was obviously somebody that touched a lot of people in a positive way. And that he was obviously a very genuine, authentic guy with no sort of pretense as to who he was. And no doubt he had some faults and challenges.
Who are you talking to, Brett? What's your mastermind?
Yeah, so I wrote a book in 98. I interviewed 34 prominent Australians in a book called Collective Wisdom on what I called success, getting ahead in Australia today. what I learned from that book was that a lot of people achieve their goals, which is what I define success as being. But often they do that at the expense of their family, their friends, their health. And I thought, well, that's not ideal. And some of them end up quite miserable. Some of the most high-profile people in Australia that I met, I thought, you don't want to end up like that. And so I then was reading, I read about 3,000 books, and I then wrote a book in 2005 called Universal Wisdom, when that book was about 7 people that changed the world. And I said that, you know, these people had discovered there are universal truths, that if you live your life in accordance with those truths, you'll always have an unseen power and a massive momentum. So those people were Martin Luther King, Nelson Mandela, Mother Teresa, Pope John Paul II, Warren Buffett, Helen Keller. You know, I saw those people and said, you know, these people have tapped into things that are deeper and that are resonant with people's DNA, no matter the time they lived in, no matter the culture they come from, no matter their, you know, nature, nurture, wherever they find themselves. Their ideas are extraordinarily powerful. And so it's better to tap into those ideas, you know, than other ideas. So a good example is, say, Malcolm X versus Martin Luther King. So Martin Luther King, Malcolm X, they're fighting the same issue. One said peaceful protest, the other said violence. Today, you know, there's a street in every suburb of America named after Martin Luther King. And Malcolm X, while, you know, more acknowledged than he once was, that string of people in the book, I've got Gandhi, Mandela, Martin Luther, all 3 of those non-violent resistors to things that they knew were not just, where they had this understanding that nobody can do anything to your conscience, that you control your conscience. And so you have a lot of power. You can kill me, you can't kill my ideas, and I'm not going to compromise what's true for your...
My question, bro.
You know, does that make sense? So they're sort of my mastermind.
Okay, so there's no like top 1, top 2, top 3?
Look, you know, I believe in the sort of Judeo-Christian tradition of the, you know, the wisdom of the Old Testament, the wisdom of the New Testament, the wisdom of Warren Buffett, the wisdom of, you know, those 3 together, which is to me Gandhi, Mandela and Martin Luther. I believe in the wisdom of Helen Keller. That book was really a book on my mastermind, which is a concept you understand. I got that from a book called Think and Grow Rich, which is a book my dad gave me, Carnegie's book, and Think and Grow Rich when I lost my job. I saw that, you know, really you achieve things with people and that you should model people that have been successful.
I agree with that. Brett,
but then the journey was to say, well, what is success, right?
Brett, back to the acquisition part. How long does your process normally take? Like, what is it?
Yeah, we've acquired, like, we've had people join our group in 2 hours, literally.
2 hours, like from a phone call to a document sign.
So Michael, a liquidator called me. I drove out to Norwest. I sat down with them. I negotiated. I wrote by hand an agreement. We signed it in 2 hours.
Wow.
They'd let everyone go that morning. I wanted to get those people back. They knew that they couldn't understand how to run Solution 6 and work out the whip and debtors or clean up the place, and I offered to do that for them. The longest one has taken 14 years. We recently had Burger Peepers in Penrith join us. Burger was 25 years. Burger Peepers before that, 30 years as Price Waterhouse, Penrith. And I had been asking Peter Berger to join us for 14 years. And then he called me the November before. We spent 11 months working that out and then announced that in November.
What does it look like? Like you mentioned 11 months, because I know a lot of acquisitions and even buying a firm, a lot of people spend a lot of time looking at things and then a lot of deals just fall apart because the DD doesn't kind of come through.
Yeah, so we do now. So what we do, Michael, is we meet people generally via Zoom and we sign an NDA and get their numbers.
Yep.
Notwithstanding what most people say about, you know, the deal's got to work for their people and their clients. At the end of the day, most of these people, well, I think all of them need to know that the numbers will work. We're pretty good at numbers. So, you know, that's easy for us to say, look, upfront, give us your numbers. We'll analyze your firm and we'll show you what we understand about your firm. Tell us what you understand, and we'll get the tic-tacs of the terms sorted out straight away. Now, as soon as you put people at, you know, minds at rest, and I'm talking down to what will each partner earn over the next 10 years in a 10-year model? How's this actually going to work? When do you get your profits distributed? What base do you get? How does it all work? Once people understand the numbers and they see the integrity and transparency that we work through that process, and very quickly to an extraordinary level of insight, straight away you've got credibility with numbers people. They're like, okay, these guys are fair income. They know what they're talking about. And we can prove the numbers because we can say, look, you can go call a bunch of our partners, here's a list, and knock yourself out. So once you get people's confidence there, they're like, okay, look, let me tell you what the real story is. The real story is this one's sick. You know, there's a lot of people that get ill. There's a lot more of that than is generally acknowledged, or they have a health issue, or one of their friends has died, or their mum or dad, or somebody's ill in the family. And they're like, I can't keep running in the unsustainable way that I've been running this firm, which is basically burning the candle at, you know, at 140% of the leader of that firm, the senior person who's really killing themselves to run the firm. So once they sort of, you know, do that first process, they feel comfortable with us, they'll tell us the real reasons. And then we consider, you know, doing one at the moment, say a 4-partner firm, I consider it 4 deals. There's an overarching deal. And then it's like, right, Michael, you're a partner. Tell me, who's your wife? How old are your kids? Where do you live? What's your story? What are your goals? How do I help you do a deal that achieves your personal goals? And then I do that, as I've done with all of our people. I do it with each one of the partners. And then I reconcile that as a deal to say, okay, well, now knowing each of you and understanding what you're trying to achieve personally, how you're trying to achieve that through the firm, and where you're trying to go over the next 10 years, this is what we would recommend. This is how we would approach it. Now, we back ourselves to do a better situation for any partner group than anyone else we've ever seen do anything like what we're doing. Because we take to do it.
Which firms were being compatible? Which firms have you walked away from? And what was the reason?
Oh, look, we had one recently after, you know, looking at the numbers, they fundamentally came around and said, look, we just want $3 per dollar of revenue. So we just laughed and walked off, you know, because you effectively got a buy versus build situation. So if you have 5 million in revenue and you tell me that I have to pay $15 million for the firm, I guess I can go across the road. You have 5 managers. I can offer them $1 million each to join me, and I own your firm, right? Yeah. So it's completely ridiculous, right? You could build a $5 million firm for less than $15 million if you're me, probably 3 times every 6 months, right? Yeah. So, you know, if it just becomes about money, we just don't want those people. So, you know, if it's just about money, we don't want that, because we feel that that's how they will run the business, run very transactional relationships with their people.
How do you value it? Like, what
we started dollar for dollar on revenue.
Is that it?
We asked them,
dollar for dollar?
Oh, we'll pay more, we'll pay less. We then just say, look, the industry runs at dollar for dollar. Tell us, you know, what you think this thing's worth and why. And then we just work it out. We've paid a lot more, we've paid a lot less. It doesn't, for us, it doesn't really matter. We're focused on, you know, what, you know, we're not looking at price. We're looking at what is the business that we get to partner with. So look, if it's just about money, we're gone. If we see the values of being really me-centered, so, you know, it's just about the partners. They don't care about their people. They don't care about the clients. They just want something that works for them and no one else. We don't want those people. And ultimately, Michael, I've got to live with this deal, right? I'm not a promoter. Most CEOs of businesses that have been buying firms in our industry over the last 25 years, their average tenure is 3 to 5 years. So they do a shit deal. They're leaving anyway. And the person that firm is selling to often won't even be there for the duration of the deal. Yeah. Whereas me, I own 50.4% of our listed headco. I'm not going anywhere. I plan to be here for the next 30 years. So if I do a bad deal, I have to own that deal. I personally own it. So, you know,
has the deal worked out, Brett? Like, when do deals not work out? Like, what have you learned over the last 54 acquisitions?
Yeah, so Buffett's got this great saying: you can't do a good deal with a bad person. I have done some I have done some deals that have turned out well with bad people, but generally that's been in the context of a partnership. A partnership comes to me and says, look, there's 4 of us, one of us is bad. We want to get out. Can you help? And the bad guy's normally, you know, older, not contributing, whatever, or younger, not contributing. And I buy the firm knowing that that person's leaving. So, you know, at the end of the day, the deals that haven't worked out have been with egotistical people that think that they are more important than their own office and or our group. And they basically spend their time trying to prove that everything that we think we know is wrong. And they'll fight you over the most pathetic things. And they'll tell us, you know, you can't bill people on a direct debit monthly. You know, you can't do better than 100 days debtors. You can't bill WIP other than once a year. You know, you have to pay your people weekly.
Yeah.
So it's basically like, I've never been able to do anything different to what I'm doing, and you can't either. If there's no willingness to change, then that becomes difficult. And we typically won't do that deal. But, you know, from time to time, we've done those deals because it's been in a geography that we want to be in. And we're very long-term, Michael. Like, I'm thinking about having, you know, we're thinking about being permanent owners of these businesses and we mean forever. So, you know, if you're doing a 2-year earn out with me and you're annoying and you don't think we can change, I can wait 5 years. You know, I bought a firm that had a terrible leasing deal that they'd signed 3 months before they nearly went broke, and we bought them. And I just had to sit there for 7 years and pay rent that was 3 times the rent we should have paid. But I didn't care, because I have a 50-year view, right? 100-year view, trying to build a 100-year great institution. So I didn't mind. And the partners are like, oh, so you'll still do the deal even though the rent? I'm like, mate, I want to be the leading firm in this region for 100 years. No problem. You've already been here 40, so we're on our way. So look, having a long-term view is important.
So if a partner, like, if it's not working out or it's a bad acquisition, do you part ways with the partner and just say, look, why don't we just part ways? Or do you actually wait for the earn-out period to finish?
Look, like all things, it depends. If you are, you know, truly an evil person who is terrible to our people and worse to the clients, so sort of what we call a terrorist, yeah, then we would be inclined to encourage you to go and play more golf. But you know, I think that's happened twice in 54 deals.
Yeah.
Right. So we shouldn't overstate how likely that is to be. Mate, most people are like Warnie. They're brilliant at some things and not so good at others. So, you know, so long as somebody's got some self-awareness and you say, look, mate, you know, we had one situation. This guy used to come out, older guy, come out and shout at his people. I said, like, when you were in your own office and you weren't in the middle of my office with 40 people, you might have thought that was acceptable. I would never have accepted it. However, now you're in my office with 40 people. I can't have you coming out here shouting at people. So it's just not okay. Now, if you're going to do it, well, you can't be here. But I'm backing you to stop that. And as it turned out, he was a diabetic and always happened in the afternoon, and he wasn't eating lunch. So we simply said to his PA, listen, he gets a bit hangry in the afternoon. Can you make sure he eats? And then it hasn't happened subsequently, and he's still with us. So, mate, you know, I think you have to have compassion for people. You have to really care about people. I don't think our economy, as I said earlier, deals with age very well. And I've dealt with a lot of people who are, you know, transitioning from being the main man or the main woman to being, you know, as one of my guys says, yesterday's person, yesterday's man, or yesterday's woman. Yeah. That's a difficult transition for anyone. And so,
right. I was going to ask you, you've got, what, 60 plus partners. How do you manage all those egos?
Well, you hire people that aren't egotistical. So, like, when you bring
still
people
a lot of
in,
partners to manage, you know, with different.
Yeah, look, it is, but that's like, you know, I always say to people, do you believe in hell? A lot of them are not sure. I say, well, have you ever seen a bad marriage? You know, that's hell on earth. So, you know, the trick is not to marry the wrong person in the first place. So if I said to you, when you are bringing a person into the firm, you're hiring a junior, imagine them as a partner and have the view that you don't hire anyone that you can't see, 3 steps above the position that you're hiring them into. So I have a marriage forever type mentality. So if you come into the firm and we're thinking about making you as a partner, I'm thinking about having to live with you forever. And so I'm extremely careful. We don't just have any old person join us or any old firm. It's easier to filter them out. Like our whole acquisition process for talent or firm is all about, right, you're going to partner with us forever. If I have to live with you forever and you have to live with me forever, I'm trying to get the people that I can't see living with us forever not to join us.
But how do you filter them? What's your filtering process? Because a lot of people
the first one is So the major distinction in our firm is that you join as a partner and it's a 10-year partnership commitment. And if you leave in the first 5 years, you lose a significant amount of your equity, no matter what. And if you leave in the second 5 years, you lose a less significant amount of your equity. Mm-hmm. And so you only get market value for your equity stake after 10 years.
So it's every firm that joins you.
Yeah. And so that is the master key in terms of weeding out short-term people. Because if you think of what's wrong in life and the world.
How does it work for retiring partners though? Like partners that want to
that's easy because a retiring partner, we're doing a different deal. They're all personal, right? So if you're off 63, you're doing a 2-year deal, if that's what you want. But you might say, I want to work till I'm 70. I want to do a 7-year deal, Brett.
Yeah.
No problem. If you're just selling, you get a 2-year deal, no problem. So we're cutting it for each person. But the majority of our partners, average age of the partnership is 42. They've all signed 10-year agreements. Why? Because the number one problem with the world is that people are short-term.
Yeah.
And so if you think about ego, most people that are deeply egotistical, they need to get outcomes quickly to affirm that they are the number one dude in the whole world. They can't wait 10 minutes, let alone 10 years to do anything. And so I'm just trying to not have short-term people join us. And so up front, straight away you say, look, mate, if you want to join and become a partner, it's a 10-year commitment. They lose their mind.
Is that what you do all your internal stuff? So like if one of your young managers wants to become a director or partner, is that the deal? They have to do a 10-year?
Absolutely.
Okay.
Yeah, that's the deal.
And then what do the numbers look like for them? Like, do you give them your...
So they buy in. They buy in under the partnership agreement. There's fixed formulas. It's all documented. Everyone knows the price they can sell it.
But it's off market. Or is it through on market?
It's off market. It's off market. Yeah, and they know the price that they're buying it. The numbers are completely transparent. They get a full partner pack, and they know exactly the commitment they're making. As soon as you look at somebody and they're not sure they want to be here for 10 years, you know you got the wrong person.
What do the numbers look like for a partner that wants to become a partner?
They're buying in at either 3, 4, or 5 times Ebitda, based on a trailing average Ebitda of under 33%, 33 to 40%, 40% plus Ebitda.
Okay. So why is it 3, 4, 5 times instead of just one set amount?
Because we're looking at the average performance profitability of the firm over the trailing 3 years to give the partners that are selling the motivation to increase the value of their equity if they're running the firm very well. And the young people acknowledge that if they're buying a very high performing firm, being a partner in every firm is not the same. If you're buying into a firm that's got a 40% EBITDA, average growth over the last 5 years of 15% a year, lockup of 54 days, that's a completely different firm to what we see generally in the industry, and it's obviously more valuable. So for the partners that are building those firms with us, they get rewarded. For the young guys and girls buying in, they're happy to buy in because, everyone's saying young people don't want to become partners. That's not true. They just might not want to become a partner with you because you don't run a good business. And that's the insight that's genuinely missing in the industry. A lot of firms can't have good young partners because they're not running a good business.
How do you help them buy in the vendor finance? So
we're prepared to vendor finance the young partners, but we want them to make an equity contribution of some description. So we get their net worth report, we look at what money they have, and we make them have some skin in the game. It is a goodwill partnership. They're signing a personal guarantee. They're fully committed to what they're doing, or they're not a partner. Now, the reason we have long-term partners is because we have long-term clients, and we want people to have long-term thinking. And we think that distinguishes us in the industry.
What are they like? How much do they end up buying? Like, do they get what, 1%, 2%? Or is it just
Doesn't matter. Like they either get 2.5%, 5%, 10%, 15%, 49% of a startup, a greenfield. It just depends on who the person is and what opportunity that we think they're suited to and that they
you're
agree
buying a partnership of that particular, practice, or as a Kelly group kind of overall?
No, so they buy into their own local office, 49.9% of that office.
Yeah.
And of our listed holdco, nearly 10% of that equity is owned by our senior management and our partners and our employees. So all of our employees are shareholders. We wanted to have a no employee firm where every person in the firm is a business owner, so that we have a firm of business owners advising other business owners.
Okay. How does that work, the employer shareholder? Is that just options that after?
No, we don't give anyone options. So, yeah, so Michael, no free lunches, no options. I gave everyone $1,000 worth of shares at the IPO.
Yep.
The business is listed. They can buy shares any day they choose. If they want to be a partner in our firm, they can be a partner if they're an undergrad, a secretary, an office manager, or any other role. They simply call their broker and buy some shares. Or they set up a brokerage account with Comstack and they buy some shares, and then they're a partner. Now, what we are doing is we have this app called Upstreet, and we give employees every type of incentive or bonus or anything else that we do within the firm. We give people money for their birthdays, money for Founders Day, money for Christmas, money for Easter, money for whatever. If you refer a new client, we give you a referral fee. If you refer a new employee, we give you a referral fee. All of those fees are paid into this app, and you're paid in Kelly Partners shares. You can sell those shares if you like and buy an ice cream or other shares or whatever you want, but we at least give them shares. And so what I've been trying to do is grow the wealth of our group over time, and that's gone pretty well.
When you take over a firm, what are the 3 things you do straight away? Or when you do a tuck-in, 3 things you do straight away that have the greatest impact?
Just turn up and empower people. I asked all of the people there to write me a list of the things that they would do to the firm if they were in charge.
Okay, so there's no standard kind of operating procedure when you do, cool, we've taken over, let's go in and we're going to change the system.
So we have a checklist of 110 things.
Yeah.
Standard things like changing the signs, but they're not very interesting. Getting them on our IT network. We run one cloud-based network. So we do all of those things.
Does everyone go on the same software straight away?
Yeah.
Okay.
Yeah, but not always straight away. So we're generally within 12 months, we align all of the software. Just depends on the firm. But look, the major thing.
What do you put everyone on now? What's the latest kind of tech thing?
So we use AE across the group.
Okay.
Dystopia Practice Manager, AE for billings and timesheets. We use Xero for many, many clients. We use BGL 360 N class depending on the what do you call it, on the firm for SMSF. We use a whole stack of software, which is all good stuff. But the major thing we do when we go into a firm is I meet with all the people and I ask them to write a list of the things that they would do if they were running the firm. So we listen to the people. Most firms know what they should do if they were, the best versions of themselves, but they don't have the management wherewithal or the group wherewithal to do those things. So, you ask them, how would you like this firm to be? And they tell us, we make a bunch of buckets under people and processes, clients, financial growth, etc. And then our job as a central team is to just drive the implementation of the things that they all know that they wanted to do anyway.
Yeah. They're just having the resources to execute some of the ideas that they've had before.
There's not many new ideas in the world, Michael, but execution is kind of king. Yeah. And the fact is that, most firms struggle with execution. So, we do execution at a fanatical level, which people love. Because
is that because you don't sleep that much?
I'm not a big sleeper, but you sleep when you're dead. I had a brother die at 45 when I was 29, and I vowed that, you know, you should be prepared and understand that, you know, you should use the time that you have intelligently to make a difference to the people that you want to know that they matter to you.
Yeah. Brad, what's your plan? I mean, you're big on 10-year plans, and obviously you had one when you started the firm years ago, which would have expired by now. What's your next 10-year plan?
Yeah, so our 10-year plan when I started the firm was to grow from scratch and list in year 10. We listed it, I think, in year 11. We wanted to list so that we could publicly demonstrate, you know, our values and behavior and the difference that we thought we could make, and that really chartered firms can make a real difference to people. You know, our private business owners employ 70% of all Australians, and we're passionate about helping them actually, you know, create employment and help those people. And then from there, I turned around and said, great, we would sort of build, we're in a phase at the moment that we call accelerate to 80 million of revenues, and then, you know, get to a point where we thought we could lead in the industry, redefine how people think of a chartered accounting firm. Ultimately, we want to be a top 10 firm in Australia by size.
Is that why 80 million is the magic number? Does that get
no, 80 gets us to a point that we think is leading, but we think that ultimately we need to be, you know, 125 plus to be in top 10 in Australia to prove that our model makes sense and that we're making real impact. And then, you know, we're about to publish a new 5-year plan once we tick over that 80 mil, which will be sometime in June, July, that we'll publish that. And that's really about saying, you know, can we measure the impact we're making? Are we making the difference that we want to make? And how can we leverage that in other places? The great news about being a public company is that we've got some of the world's brightest people as shareholders. And so you've got all these extra coaches, you know, an extra mastermind group who are giving you input. You know, we've been introduced to people in you know, Switzerland, Germany, Norway, Finland, Sweden, the US, the UK.
Are you going for global expansion? Are you focused on ANZ?
Yeah, so then as we think about the next thing, we're always like, do the thing at hand and do it really well. Yeah. Because if you do that, you know, tomorrow takes care of itself. So then we're now being urged by many of those people, hey, why can't you? You know, I spoke to a guy in Paris the other day. He's got 7 firms. Hey, Brett, why can't you come and help me with these firms? Well, you haven't asked, but given that you have, maybe I can think about that. I had a guy from Utah the other week reach out, and I did a session with a firm in Utah in the US. So I've got shareholders now all over the world who are saying to me personally, hey, Brett, why aren't you thinking much, much bigger about the impact that you can make? Yeah. And I've said, well, you know, it's the old, you know, think globally, act locally. We'll first, you know, build a business that we think is, that we, you know, that we can be sure is made, you know, is fulfilling its mission wherever it's operating. And then we'll think about, you know, other places that we can do that. At the end of the day, Michael, like my thing is I want to help people. I'm happy to help people anywhere that share our values and our commitment to making a difference. And, you know, I feel like if you do that, you know, with diligence and discipline every day and real passion, then tomorrow takes care of itself. And today, you know, that's certainly proven to be the case.
Brett, some rapid fire questions so we can wrap up. What's your favorite quote?
Time is limited, death is certain.
Why is that your favorite?
I think that people live as if they're going to live forever, and they're not. So I think it's important every day to reflect on, you know, we don't have forever, so we should be very deliberate in terms of the difference we're trying to make.
Favorite book?
Favorite book?
Well, if you only had one book to take with you to Mars with Elon Musk, you know, which one would you take?
Look, I'll give you my favorite books are The Snowball on Buffett, King of Capital on Schwartzman, Founder's Mentality by Bain and Company, The Outsiders by William Thorndike, Toughen Up by Michael Hill, Warren Buffett by Hagstrom.
If you had to take one to Mars, because it's the only book you can ever take with you and read.
Oh, you probably, you know, I think Western culture's built off the Bible. You probably take that and, you know, understand it better. You had to take one book, but if you're taking a business book, you'd probably take The Snowball.
Okay.
There's another book called Titan, which is amazing. Like, it's similar to Snowball and an incredible book.
What have you read, watched, or learned recently? Because I know you obviously read a lot, but what's something that you've learned recently that's had the most impact on you?
This book here called Chris Mayer's book called 100 Baggers. So you can see in my pile here that when I find a book I really like, I buy dozens of them and I give them to people. So I've been giving that to all of our partners. It just shows you can get 100 times stock return over time. On average, it takes 25 years. So again, just seeding the ideas with our people that it takes a long time to do something incredible.
Yeah. What's something that most people don't know about you?
I don't think most people know much about me. But I don't think too much about it. But yeah, I'm not sure. I think anyone that knows me knows I care deeply about the people that I work with and the clients that we look after.
Biggest regrets?
I can't say that I have any. If I could have done, my dad died when I was 29. If I could have more time with him, I'd film him telling his life story.
Okay.
But I don't consider it a regret. I spent a huge amount of time with him. But if my fundamental number one value in terms of personality trait is I'm a sort of maximizer. I'm always trying to make things better. So when I look back, I go, oh yeah, I wish I could have filmed so much of what my dad told me because I love my dad and he was a really wise guy.
Okay. I mean, that would kind of answer potentially the next question. Who would you want to have a drink with the most in the world, past or present?
Oh, look, if I could bring, probably the saddest thing in my life was my dad died before I met Beck, my wife, and got married and had our 3 kids. And I think he would have, he loved kids. He would have loved hanging out with the kids. So I would, love my kids to have been able to meet my father, who was by far the most influential person in my life.
What does your downtime look like then, given how hard you work?
What was that, sorry?
What does your downtime look like?
I just like to read.
Okay.
Yeah, I like to walk, run, lift weights, and read.
So when do you find time to spend with your family?
Every night. I have dinner with the family every night. I have a rule now that I don't do functions more than one night a week. I rarely do functions. I spend the whole weekend with them, generally. If I need to work on the weekend, I do it at 4 a.m. on a Saturday morning. I get up very early and I do it before any family time.
You still do that? Getting up at 4 a.m. every day?
Not every day, but certainly if I need to work on a Saturday, which often I want to, there's something I just want to work on, I just get up very, very early and I work for a few hours before anyone gets at me.
What time do you go to bed then?
Normally 11. I could try to get up at 5, go to bed at 11.
Yeah, okay. Brad, any other takeaways? Because obviously there's a million things we could still discuss, but any other takeaways do you want the audience to?
Look, my advice would be, I always hesitate to tell people, how much I sleep or how much I exercise or what books I read or these sorts of things, because, no one needs, the world doesn't need another version of someone else. So, really, I think wisdom is firstly, getting to know yourself well, understanding your strengths and weaknesses, and being, your authentic self. And so that's the best thing that you can bring to other people, and to have the humility to be that, and the confidence that comes from playing as you rather than as a sort of carbon imitation of someone else.
How have you grown along with the Kelly journey?
What was that, sorry?
How have you grown alongside with the Kelly Partners journey?
I'm just, look, I'm very accepting of people. I've always loved people. So I feel like I've found my sweet spot where I get to spend time with people and helping people. I just love people. And that's unusual. Most accountants like the technical end of the work. I don't really like people. I like the technical end. I'm gifted at that stuff, but I care about making people better off. And so I've found a way to do that 24 hours a day if I choose to. And that's in and of itself, to find work that's very meaningful is an amazing thing.
But how have you grown as a person over the last 15 years?
I'm just better at helping people. I've got more capacity now. I'm more tolerant. I'm more patient, I'm more empathetic, I'm more, I'm just, I understand the values that matter, and I work every day at getting better at them.
Okay. What do you attribute that growth to? Is it just experience, or is it something
I think,
happened along the way?
like I do all these, I've done all the personality tests. My number one trait in every test is learner, maximizer, get better type of person. Yeah. I think it's innate to a great degree. I've always been like that. My parents have always said that. Well, I'm just hugely curious, trying to understand how things work, trying to make sense of a mad, mad world.
Fair enough. How does your wife put up with that and the kids?
Well, my wife's, a saint, and surely we'll go to heaven. And the kids, the kids know like that's how I am. I think you've got to be accepting of your kids and your partner, and they have to be accepting of you. But that means you need to be genuinely honest about who you are and what drives you.
Yeah, no, I agree. But thank you so much for your time.
Mate, I really appreciate the time to catch up. I recommend the other podcasts. I've been listening to all your podcasts, which has been great. I've learned a lot from them, so I appreciate the time again, Michael.